So your business is going global. You're hiring the best talent from all over the world, which is fantastic. But here's the thing. With that huge opportunity comes a major compliance trap that, honestly, so many companies fall into. Today, we're going to break down the one critical mistake U.S. companies make when paying foreign contractors, and most importantly, how you can avoid it. Okay, let's just dive right into a super common scenario. You've hired an amazing software developer based in Germany. She's brilliant. You start paying her invoices just like you pay your freelancers in the US. Then, come January, you do what you think is the right thing. You send her a Form 1099 NEC. It feels like you're checking all the boxes, right? But that one simple form, well, that could be a mistake that costs you thousands. And here's where the process completely breaks down. You see, for a contractor right here in the US, it's a simple, familiar dance. You get a W-9, you pay them, you file a 1099. We all know it. But for a foreign contractor, that last step is a total non-starter. The Form 1099 is strictly for U.S. persons. So what are you supposed to do? Well, it all boils down to understanding one single core tax principle.
Now, to get this right, you really don't need to be a tax lawyer, I promise. You just have to wrap your head around one fundamental idea from the IRS. It's called the source of income rule. And once you get this, it's like the key that unlocks this entire puzzle.
Okay, so this is the absolute heart of the matter. The IRS cares about one thing and one thing only. Where was the work physically done? It doesn't matter that your company's in New York. It doesn't matter if their bank is in London or that you're paying in US dollars. The only question you need to ask is, where was that person's feet on the ground when they were doing the work for you?
In this example, which comes straight from IRS guidance, just nails the point perfectly. If your contractor is coding away in a cafe in France, their income is sourced in France, period. It's considered foreign source income, which means it is completely outside the world of 1099 reporting.
You know, what's really interesting here is you can see just how consistent this idea is. For different types of income, the IRS looks at different things, right? For interest, it's where the payer lives. For dividends, it's where the company was incorporated. But for personal services, which is the work your contractors are doing, it is always 100%, no exceptions, the location of performance.
Okay, so we've established that the 1099 is the wrong tool for the job. So what is the right tool? Let's crack open the compliance toolkit you need, and it all starts with getting the right piece of paper before you do anything else.
I mean, you can't get much clearer than that, can you? This is the bottom line. Sending a 1099 to a contractor working abroad is just flat out incorrect. The IRS has a completely different system for you to certify their foreign status.
And this is probably the most important action you can possibly take. Before a single dollar leaves your bank account, you absolutely must have a valid Form W-8 on file. Think of this form as your shield. It's your proof to the IRS that you knew the person was foreign and that you did your homework. Now, which W-8 do you actually need? Well, it's pretty simple. Is your contractor just an individual, a freelancer? You need a Form W-8BEN. Are they working as a foreign company, maybe an LLC or a corporation? Then you need the W-8BEN-E. That's it. Getting the right one is step one. And here's the whole onboarding process laid out for you. 4 easy steps. You request the form, you check that it's actually filled out right, and then you stick it in your files. But that last point is so important. Unlike a W-9 or a 1099, you do not send this to the IRS. It's for your own internal records, to justify why you aren't filing a 1099. But of course, in the world of taxes, there's always an exception to the rule, right? So what happens if that awesome contractor from Germany flies to your US office for a 2-week project? Well, that changes everything, because now the source of income is suddenly inside the United States. Now, even in this situation, you still don't use a 1099. The correct player to bring onto the field here is Form 1042-S. This is the specific form the IRS designed to report payments for US-based work that you make to foreign persons or companies. So the moment your foreign contractor steps foot in the US to work for you, a new set of rules kicks in. You have to report those specific payments on a 1042-S. And, this is a big one, it automatically triggers a mandatory 30% tax withholding on that payment. That is a huge change from just paying their invoice.
But this is where having that W-8 form on file becomes even more powerful. See, if the contractor's home country has a tax treaty with the U.S., they can use that W-8BEN to claim a lower withholding rate, sometimes even 0%. But if you don't have that form, you're stuck. You have to withhold the full 30%.
So, why are we spending all this time on which form to use? Why does getting this right matter so much? Well, because the IRS penalties for getting this stuff wrong are serious, they're time-sensitive, and they can stack up incredibly fast.
Right, so the IRS doesn't just hit you with one penalty. Oh no, they charge a penalty for each wrong form you file with them, plus a separate penalty for each wrong statement you give to the contractor. So one mistake for one person can mean 2 penalties right off the bat. Now imagine that across your entire team of foreign contractors. It just snowballs.
So let's actually look at the numbers, using tax year 2025 as an example. If you catch your mistake really fast and fix it within 30 days of the deadline, the penalty is, relatively low, $60 per form.
But if you wait just a little bit longer, the price of that mistake more than doubles. Correct it after that 30-day window, but before August 1st, and suddenly that penalty jumps to $130 per form.
And if you file after August 1st, or maybe you just don't file at all, the penalty for each and every form failure skyrockets to $330. Think about it. If you incorrectly filed for just 10 foreign contractors, that's thousands of dollars in penalties, all for a simple paperwork error.
This table really lays it all out. You can see how the penalties just climb and climb depending on how long you take to fix things. But look at that last line, intentional disregard. That's where the risk goes from bad to potentially catastrophic.
And this quote directly from the IRS should really get your attention. If they decide you knew the rules and you just decided to ignore them, the penalty starts at $660 per form. And this is the critical part. It has no maximum. It could be 10% of the total amount you paid out. This is why this isn't just some accounting issue. It's a C-level concern.
So let's wrap this up with a super clear checklist. Your 4 golden rules. 1. Never ever use a 1099 for a contractor working abroad. 2. Always get that W-8 form signed and in your files before you pay. 3. Remember the source of income rule. That's your North Star. And 4. If they do work in the U.S., use Form 1042-S.
Look, hiring global talent is one of the most powerful ways to grow your company, but it absolutely demands a smart, compliant process on the back end. So the real question to leave you with is this. As you build your global team, is your payment process built to protect you, or is it accidentally built for risk?